Hello, and welcome to our next nap. My name is Irina Ryshkova, and I'm your nonprofit auditor. I designed these naps to give back to nonprofit community for all the years that I've been lucky enough working with nonprofits, and everything that I'm as an auditor learned. I would like to share with nonprofit communities because I do understand that nonprofits very often do not have sufficient amount resources to get necessary information, and accounting and finance issues can be quite complex. Therefore, I decided to create these short videos on the various nonprofit accounting and finance topics, hopefully that will be very beneficial for nonprofit communities, board of directors, management, and finance teams. Thank you so much for being here with me, and let's start. Full disclosure, once again, these videos are not authoritative in nature. This is just my initiative to share my experience and provide guidance based on my own experience. If your nonprofit has any specific complex issues, I would invite you to consult your own auditor and your own finance team. And you can always contact me. Let's start. On the last nap, we discussed four main types of financial statements. Four main types of financial statements under general accepted accounting principles are: number one, income of financial position or balance sheet; number two, income statement or statement of activities; number three, statement of functional expenses; and number four, cash flow statement. We discussed in details statement of financial position or balance sheet and statement of income statement in a previous NAPs. And today we will be discussing statement of functional expenses. This is one of the most mysterious statements, but also very, very important statements for various reasons. So let's start saying, what is statement of functional expenses? Statement of functional expenses specifically designed for nonprofits. And the reason for that statement is to provide readers of financial statements some background and analysis of effectiveness of a nonprofit. When all expenses that incurred by the organization for a specific period of time are split in two main categories: it's a program expenses and supporting expenses. And then supporting expenses are split between management in general and fundraising. But primarily, it's program versus supporting services. Pretty much, nonprofit organizations are all combined together in one bucket, nonprofits, only because based on their exempt status under the Internal Revenue Services. However, each nonprofit is very unique. Therefore, to somehow understand efficiency of nonprofit, statement of functional expenses is highly used to see how much of each dollar that was spent by nonprofit goes directly to program activities. Once again, statement of functional expenses split between program and supporting. Ideally, everyone wants to see more dollars go directly to direct program activities. Rating agencies use statement of functional expenses to rate agency based on how much dollar goes direct program activities. So let's see how nonprofits should allocate expenses between program and supporting. Some nonprofits have various programs. Some nonprofits have one program with various activities. It's up to management to identify how many separately identifiable programs nonprofit has. For example, if the organization is serving homeless community, they might have two separate programs. One program when the nonprofit serving feed the homeless in the soup kitchen, and another program where nonprofit actually provide housing for for homeless individuals. So these would be two separately identifiable programs. And if they are separately identifiable, nonprofit has to indicate that it has two programs and split expenses in those two programs related to program activities. Now, what expenses go to program activities? Only direct program cost goes to program activity, not to support. So everything that goes towards actually recipient of the benefits, that would be direct program expenses. Supporting expenses will be expenses that nonprofit incur to support direct program activities, and they will be management in general and fundraising. And that would be typically expenses such as insurance, some rent if they have for administrative purposes. It could be wages for the executive director who does not work on specifically on program activities, and so forth. That would be management in general. And fundraising activities will be all activities related to organizations' efforts to raise funds. That would be sending thank you letters to their supporters. That would be creating special events. It would be efforts to write grants, applying for grants. Would be efforts for nonprofits reaching their community about their activity to raise awareness of what they do. This all gonna be fundraising expenses. As you can see, and you probably know, that allocation between program, fundraising, and administrative expenses are very subjective and involved a lot of management estimate and developing methodology. So what is important to hear to understand for nonprofits? First and foremost, nonprofits have to have a policy and methodology how expenses get allocated. Methodology can be more high level estimates or can be very detailed, looking at each expense separately. However, it has to be methodology and it has to be consistently applied, and it needs to be reasonable. For example, main mistakes that we see as auditors when nonprofits just take an expense and say 30% will go to program, 30% will go to management in general, and the rest gonna go to fundraising. Just simply percentage without any substance, and that percent applied to many accounts. That is not very good allocation methodology. Allocation methodology has to actually correlate with the effort that nonprofit puts towards program, management, and general fundraising. And it also needs to be reasonable. For example, insurance expense or auditor's fees cannot be programmed by nature. They're not providing direct services to the members and not serving main mission of the organization. Therefore, some expenses by nature cannot be programmed. What I would recommend very often to develop methodology that's applicable to the group of accounts. For example, rent can be allocated based on the function that premise is used. For example, if part of the office is used to run actual program activities, meeting with the recipients, with the members, actually doing actual program work, then that percentage of the square foot multiplied by time that use that location could be allocated to program, and then the rest would be general administrative expenses. Supplies, for example, it's very hard to allocate percentage-wise. However, organization can determine that it buys a lot of supplies primarily for admin purposes, and everything will go to administrative. Unless it's a special event and nonprofit buy a lot of balloons and other supplies, and can be separate account Or it can be determined that typically 50% of expenses for supplies goes to fundraising and 50% to admin. Therefore, 50 supplies will be allocated 50 between program and 50 between and 50 to fundraising. So what is important for management and accountants, sit down together, look at expenses and allocate methodology. And it should not be done just once and the methodology is good for many years. It needs to be done at least on annual basis because operations of nonprofits changed, needs changed, and even time that people spend on specific function also changed. Payroll is often allocated based on the people, employees' areas of work. For example, for program director, most likely at least 90% of the work will go directly to program. For executive director, it's very unusual when the whole payroll is allocated to program activity because executive directors do need to work on running the organization, which is management in general. A very common mistake we see as auditors when wages are allocated but payroll tax and benefits are all go to program. Benefits and payroll tax have to be allocated in a similar manner as the wages. Otherwise, it would be inconsistent allocation. Another very common mistakes we see, it's inconsistent allocation from one year to another. Or when nonprofits specifically want to see more expenses go to program activity and they start being creative. There is no need to do that. I think statement of functional expenses, typically a lot of rating agencies do want to see that at least 75 cents on each expense dollar go towards the program activity. However, it's not always the case. As long as nonprofit has a valid explanation why this specific year program expenses less, that will suffice most funders. Some nonprofits tend to make their program activities as 90%, very high. It also can be very dangerous trend because this way when nonprofits allocates very little and honestly spend very little on the admin and management, it means that nonprofit pretty much suffocates and minimizes its internal development, and it can cause sustainability for nonprofit because nonprofit needs to spend enough to build internal infrastructure and to support activities in order to run efficient program activity. However, it's not uncommon to see that in the beginning of the nonprofit life, in the first couple years, program activity less than supporting activities because nonprofit logically will spend more money, more funds to build infrastructure, and also more funds to do fundraising because for young nonprofit, they need to put more effort to bring awareness, to bring more money to nonprofit. So it's understandably, nonprofit will have more fundraising and administrative expenses. For nonprofits that do a lot of, that's supported by a lot of federal grants especially, that allow very little overhead and require a lot of expenditures directly to the program activities, we would see less administrative and management expenses and more program expenses. Just to summarize, overall, there is no one methodology that works for every nonprofit. Nonprofit needs to truly look at its functional structure of expenses between program, management and fundraising, and management, administrative and fundraising. Develop robust methodology, preferably by groups. For example, payroll allocated this way, rents, utilities another way, supplies the third way, depreciation depending where the fixed assets are, and so forth. Have a good, robust methodology. Share that methodology with bookkeepers. and review this methodology annually to make sure that it's still correct, still reasonable, and true to the organization's performance. Once again, statement of functional expenses are very widely used and analyzed. Therefore, for board and for the management and bookkeepers and accountants, it's important to know methodology, consistently have a good methodology, current, and apply it consistently. Thank you so much. Hopefully, I explained a little bit about statement of functional expenses and how to look at it and how to maintain it. And if you have any further questions, feel free to contact me. Thank you so much. It was a pleasure, and thank you for being here with me. Have a wonderful day.